Let's go. You guys hear me? Anybody hear me in the chat? Sorry, if got two people watching. I'm trying to get everything set up. I don't really go live on here too much, so this is my trying to practice here. Let's see. issues. All right. So you can add a camera. What if I can do zoom? Hey, what is up? So, this is my. I'm trying to get the hang of this live streaming here. I'm trying to see how I can put my face up in here. Let's see, add. Scene one. What is up? What is up? All right, guys, welcome to the live stream. I was trying to show. I was trying to figure out how to show. I'll have to figure it out some other time, but. How's everybody doing? How was your morning session? So, let's get into this. this morning, we took these. Is a 1 hour time frame you base your trading setup from? No. So I'm gonna get into all this real quick. Thank you guys for tuning in. We are. Let's see here. So if I can play some music. So this morning, during the live stream in Discord, we yo, what up, Quinn? Yeah, I think Quinn was in the live this morning. So this morning, let's start with the top down, right? So this morning, before we had tapped into this daily fair value gap here, I had been calling all week. We tapped into this this volume imbalance here, and we haven't closed above it. So all week I've been calling us to come down lower into this daily fair value gap. We have a lot of sell side liquidity in here, so I wanted us to trade lower before we go higher into this weekly. We have the rest of this weekly imbalance up here, down to this low. So before we go higher, I would like us to go lower on the daily. So when we were trading this morning, I was noting on the 1 hour. So I like to go weekly, daily, and the 1 hour. Right. So come down to the 1 hour. And you can see we have these equal lows down here resting. We also have this 1 hour gap below inside of this daily fair value gap, higher time frame. And of course the daily above us and the weekly above us. So we have this 1 hour under here as well. But I liked these relatively equal lows here and these ones down here for a lot of liquidity to be taken, right? So when we were trading this morning, we come into our 10 to 11 window. Let's go to our time frame here. So Thursday, we open up at midnight. Purple line is the midnight opening price. So we take out the Asian lows here and then we drive higher, bouncing off the midnight opening. Whoa, where did my stream go? Oh, there it goes. So we had news at 8:30 this morning. So just before the 10 a.m., which we like to trade between 10 and 11 a.m., right? So we tapped into this 15-minute fair value gap above us here. And this is where we were just started to reject from. So 5 minute left this nice fair value gap, and inside of that 5 minute we had this 1 minute bearish fair value gap. So we could have, and a lot of people this morning took these sells, so we tapped right into it and then aggressively moved towards this 1 hour fair value gap. Now you notice how we kept bouncing here. So if we looked at NQ at this time was already rallying higher. So you can see the market started to turn here. I tried to take some shorts in here, with a very tight stop loss in case we wanted to actually run towards that daily that I was looking for as the objective. Let me turn this off. Well, I'll leave it on. So towards the objective, but we started to rally higher on NQ, so I figured, okay, well, if we're in a discount from this high to low, and it's starting to turn, where's price going to want to come back to reprice into a premium? So we had this 1 minute fair value gap here, and then we also that we never came back up into, and the rest of this area here. So these are premium areas for price to run back up into before we run lower. Why is this muted? Who knows? But before we run lower, and so when we started to rally higher here, I was looking to see if I could get entries on the 1 minute, but the 1 minute wasn't really giving me anything. So drop down to the 30-second here. We had nothing really. We had one small fair value gap in there, but it wasn't really giving me anything. So I dropped down to the 15-second, and on the 15-second, you can see here that we had this 15-second bullish fair value gap. So this is where I was looking to take my buys from. So once we dropped down one more time, I triggered my buy in there. I think I took two contracts. Right to our target. So that's the trade we took this morning. But overall, the longer term, I was looking for lower prices. So now we came up, retapped that 5 minute fair value gap in here. Let me pull this over. This is our 5 minute fair value gap. Tapped in, and then post lunch hour here, we ran all that liquidity that was beneath us. So we go on the 5 minute here. All right, so we dropped aggressively into this 5 minute and then continued towards the sell side area that we had marked up off of that 1 hour. And these lows, relatively equal lows. So you notice a lot. If you notice a lot of the order flow here, the all these bullish candles were respected down. Okay, we finally we hit news at 2 o'clock. The Federal Chairman Powell was speaking, so we just melted even more down into that daily fair value gap. So what I want to see is us drop lower into this daily fair value gap. Let me turn this indicator off. So I'd like us to drop lower in here, and then look for like a 1 hour. Maybe drop into here. This green. Maybe tap here 50% of the daily into that 1 hour, and then look for 1 hour market structure shift up. Just wanted to thank you and leave a shout out. This guy provides so much information, very supportive, has live meetings. Oh, why is it showing that? Has live meetings and here to help. Thanks, Quinn, man. Yeah, if anyone's interested in the live trading on Discord, they'll can drop the link. The link's in on my channel. Only thing I'm struggling with is information overload. Trying to figure out if I'm taking too much info. Should I stick to one or the other between the silver bullet and Judas? Trying to learn it all, but I would I would stick to. You're gonna want to stick to one. You're gonna want to stick to one model. Like for me, I really like the silver bullet. Yeah. So the Judas can be a, if you think of it as like a as just another concept or PD array, or what if you're thinking of like a type of formation or pattern. So like for instance, yesterday Wednesday. Also, mainly when you're using the silver bullet, we're day trading intraday. We're in and out, right? Within an hour or so, a couple hours, maybe 2 hours max, right? So let's go to 5 minute, right? So this was a needed open gap. So about 10 o'clock is here, right? So if you look at price, right, we're rallying higher. Yeah, he said, yeah, that's why I love it. Yeah, so we're rallying higher into the open, right? So the CME, when we're trading futures, we want to think of like the CME open, which is the Chicago Mercantile Exchange. CME, right, is at 9:30. So the 9:30 open, right? Before that, we have the New York Open, which is like 7:30, and then opens again. There's another opening at like I think 8:30. We rally higher, but 930 is the CME open, and this whole move up can be considered the Judas swing, because then 10 o'clock hits, right? We take the high one more time, inducing buyers, even more buyers, to take the open, right? Traditional retail is going to take the volume on the open, and then everyone just gets smoked, right? Right to these lows. See that? Yes, I'm part of the smoked. He said, "Yeah." So, you guys, whoever's watching, if we can hit that like on the stream, so we can get more people in here. So we can drop. I'm about to drop a lot of knowledge right now. So hit that like. Hit that like. Hit that like button. So what's happening here, right? So that move up at 9:30 open is the Judas. Okay, what are we tapping into? Right? What did we hit here and reject on to the left? Well, if we look at the 15-minute time frame over here, we can see we have an inefficiency here. We have this 15-minute gap here. And I'll get rid of some of this. Right, so we tap into this 15-minute gap here. Get rid of some of this. So this is going to be how we do our top-down analysis. 15-minute fair value gap, right in there. Okay, we drop back down to the 5-minute. Okay, so notice the candle bodies here. Right, so our silver bullets from 10 here, right, 10 to 11. Just a second, guys. All right, I'm back. Let's get back into this. So, hopefully, Quinn, if you're back, if you're still in here chilling, let's go over this again. So, from the open, we trade up into this 15-minute fair value gap, right? 9:30 is the CME open. A lot of people buying, trying to catch the volume to continue higher. So this is your Judas swing or your fake out, right? Candle bodies will always tell the story or the narrative, right? So pay attention to where the candle bodies close. The wicks will do the damage. So we mohawk here, we leave this swing high, and then we drop aggressively. We create this 5-minute fair value gap here, right? We displace, breaking market structure here. Market structure shift, right? This is a 2022 model. Fair value gap here. There's your entry here. With the draw on liquidity being pulled towards these equal lows here, right? We can see consolidation area. Price just consolidated in here. We leave it and we retest the consolidation, right? This is London lows. We retest it and drive higher overnight. So original consolidation, we drive higher into a higher time frame array, and then we reverse into market structure shift 5-minute. Now we drop to the 1-minute time frame. Okay, and this is what I was just telling someone this too. To really understand the silver bullet, we have to understand market maker models. Okay, so market maker buy and sell models. So this is our original consolidation. To the buy side curve. Right? Now we've reversed here. This begins the sell side of the curve here. Back towards the original consolidation. Okay, now what happens on the sell side of the curve? On the 1-minute, we get a break in market structure here. Right? We aggressively break lower, breaking these lows. 1, 2, 3 consecutive bearish candles down. So this is at 10 o'clock. Fair value gap in here. This is your low risk sell, right in here. Okay, this is the first stage of the sell side. Low risk sell. This is your smart money reversal. Off the 15-minute time frame. 15-minute fair value gap, reverses, breaking market structure, low risk sell. We drop lower, market structure shift, drive back up. This is also a 5-minute fair value gap inside of this 1 minute. This is our first stage of distribution. Okay. So, smart money reversal, low risk sell, first stage of distribution in here, which is this whole area right in here, right? It's collecting more orders to distribute. Leave this fair value gap in there. This candle's low to this candle's high. Reprice it perfectly to the tick on the candle body. Drop lower, and we respect it on the lower end here. Now, we aggressively, with this bearish candle, drop lower one more time. Respecting here, all across here. So, in essence, the second stage of distribution is this 1 minute candle here. Now the second stage of distribution, this 1 minute fair value gap, make it black. Okay, this is where the gems dropped. Ready? The second stage of distribution, I can spell right. Second stage of distribution is in here. This fair value gap. In this consolidation area where we're accumulating tons and tons of more orders. Right? This is your silver bullet. So, silver bullet is your second stage of distribution inside of a market maker model. That is what the silver bullet is. That's why it works. That's why ICT it says it's his favorite, because once we tap in here, it collected up tons of orders. We came back up, respected it still, and then what did we do? Aggressively, boom, boom. Within 2 candles here, here, aggressively pulled away, attacking these lows. So that's why I like the silver bullet. That's why I think a lot of people, if you're looking for a model, you haven't found one yet, the silver bullet is an amazing tool. It's an amazing model. Once you understand where it happens and you can time price with time here. So, right, we're inside of this 10 to 11 window. See here. right in here. Boom. Right on the 1 minute. So when you can time price with time, when you can match up time with price on the narrative, and inside of that, this sell model, a buy to sell model, original consolidation, London lows, equal lows, drive higher into a 15-minute higher time frame array, smart money reversal, right? What time is this happening? Right, 9:30 open, 10 o'clock, boom. Low risk sell, first stage, second stage. So if you miss the reversal and the first stage, you look for the second stage. This gives you time to look for that second stage and get in on that silver bullet, right? When is it gonna aggressively run again? London close, which is about 11 o'clock here. Right, we reprice one more time and then boom, go up the ghost. So quick rundown. That was a great question, Quinn. But yeah, that's why I like the silver bullet. Let's go back to live reset. So today, get rid of some of this now. Oh wait, I need that. Today we reversed out of a 15-minute as well. 9:30 we continued down, but we had a continuation day. So when we dropped this morning, I was looking inside here. I wanted price to come back up one more time in here. So we had a low high, or high low higher high, and then we dropped through it, but we never returned back to this and then breaker. We repriced to this 5 minute and 1 minute, and so when we drove lower, I wanted to see us return back up into this 1 minute fair value gap, but we never got to it during the 10 a.m. So we just continue to drive lower. You could have caught maybe this down and caught almost 9 points, almost 10 there. And then let's see, about your 5 points there if you're trading silver bullet. Or if you take this one, you could have caught 5 points there off of this 1 minute, which I did enter here because we were respecting this. We dropped down 5, but I ended up, I was trying to hold for 10, trying to hold for the daily sell side, but we never got there. We reversed off the 1 hour, in which I was able to catch a 15-second entry here up toward back to where originally we're looking to take the first sell. Tap back up into the 5 minute, respected this 1 minute, and then just melted right before the Fed speech. So again, off the 1 hour, I like us dropping into this 1 hour and respecting the 50% of the daily time frame. See, beep, beep, beep. Was able to enter in 5 minutes for value gap there. Nice. Let's go. Yeah, I know a lot of people in my Discord this morning caught that sell. Typically, I'll take them off of the rip like that on a continuation, but because we were ahead of the Fed speech this afternoon, I was a little bit more cautious this morning and being more patient. So I was able to catch. Let me see what did I catch on this buy? So I was able to catch almost 10 points this morning off this 1 hour. Back up to it on a kind of counter trend, using this 1 hour back up. But yeah, overall trend was bearish towards these. Originally, I wanted to attack these lows, which we ended up doing in the PM session. Equal lows, sell side on the 1 hour, back into this daily fair value gap. So, but yeah, higher time frame. I'd like us to drop into this daily on ES, and then look for 1 hour tap into this fair value gap, and then create some sort of structure that we can break higher to then attack these highs above us. I like this buy side and this daily above us. And this weekly, the rest of this weekly fair value gap. If we think of the daily like we would a lower time frame, right? We reversed off of this. We had a volume imbalance down here. These lows were swept. And so we could, if we measure this swing low to this swing high, I like to use the bodies here. 50% of this range on the daily would be right in here. These 3 down close candles as an order block, right? We turn on the midpoint, midline, right? Maybe 50% of here, which lines up this volume imbalance. So, but maybe we tap the top of it a little bit, and we tap into this daily for like up below us. It's a possibility. But I like this one better, because this is where we broke market structure on the daily here. So if this is a shift in market structure, right? The candle that broke it is this one. So we could possibly wick down into this order block and then continue higher up into this daily and weekly. But we failed to break these highs still, relative equal highs here in this buy side. So looking to see where could we get a retracement from, maybe into a discount, 50% of this range, or we leave this open as a what's it called? Kind of like a measuring gap. Maybe we leave this open. We just tap into this one, right? Possibly wick down into this daily order block and drive higher. So I'm looking at this as I would a day trading lower time frame, but on the day we're using higher time frame. So if we're gonna bounce, where are we gonna go from? Some potential discount raise, maybe 50%. We wick down. If we drive lower, maybe this volume imbalance and 50% of this order block, which is these last three down close before we moved higher aggressively. So if we zoom out, we can see a higher time frame, which we just kind of completed. Higher time frame market maker model, right? Original consolidation, smart money reversal, boom, boom, aggressively move towards these lows, which we kind of just wicked through. We didn't really get a good sweep. So there is a possibility we could still come down to take out these lows later on. But from the weekly and monthly standpoint, we left some relative equal lows down there. So the monthly, weekly. Yeah, weekly volume imbalance below. So definitely a possibility. But again, I like that we dipped into this daily. Move this over. One hour. So last hour left of trading. I got in on that second leg sell right there. Nice, Aries. Let's go. Did you get in on this 5 minute? Did you get in on the 5 minute? Last big push. Here to here.